Good morning, everybody. It's Monday, April 3rd, 5:34 a.m. Central Time as I speak here. May corn futures up 4.5 at 665. May soybeans up 8 at 1513 and a half. May Chicago wheat up 10 and a quarter at 702 and a half. May Kansas City wheat up 11 and a quarter at 889. May spring wheat up 10 and a half at 906 and a quarter. We're going to start off with OPEC and crude oil this morning. Kind of a surprise announcement over the weekend. OPEC is going to cut production, and this is something that nobody really saw coming. Crude oil prices trading sharply higher this morning as a result of this. Crude's up like $4, was up more than $6 per barrel at one point last night. So this OPEC meeting, which I believe was online, it included Russia, included Saudi Arabia. They're going to cut production, or they have cut production now, to the equivalent of about 3.7% of global oil demand, which is a big deal. Just last month, crude oil prices fell, below $70 per barrel in the WTI, lowest in 15 months. At that point, everybody was talking about the banking crisis, talking about recession possibilities. Now you've got this big rally on this OPEC news. The question here for me is crude able to hold a rally? It has been unable to hold a rally for months now. It's been in kind of bear market to sideways territory at best. They've already backed it off just a little bit from where it peaked last night. I'm not sure where this will land here today, but sharply higher crude trade to start the week, and I would argue that that's a positive for most commodity markets out there. I've kind of made the argument in the past that the weak crude oil prices have been kind of a negative headwind for grain prices, for general commodity market direction. So if we can find a bottom in crude, that would be, it's a mixed bag of things, because it probably means more inflation, it means higher gas prices, but maybe positive for grain prices. We did have a big report out on Friday. U.S. farmers intend to plant 92 million acres of corn this spring. This is the Prospective plantings report, which was out on Friday. So you've got a 3.4 million acre increase versus 2022 expected in corn, or that's what farmers intend at least. One of the issues here is that you've got big increases expected in states that are experiencing cold weather, record snowpack in some cases. North Dakota, South Dakota, and Minnesota expected to account for 1.3 million more acres of corn this year versus last year. And again, the total increase 3.4. So you're talking a big chunk of that expected increase in these three states, which absolutely have some weather issues, and we'll get to that here in a second. So I think immediately following the release, when the trade saw these numbers and where the big expansion was expected, and there's corn acreage expansion expected almost everywhere versus last year, but a lot of expansion in those three areas in particular. Traders already talking late planting. Maybe these acres don't get planted. Maybe they get switched to something else. Maybe there's prevent plant. So this is already a question mark here. U.S. farmers intend to plant 87.5 million acres of soybeans, which is about flat versus last year's total. When you go to the stocks were friendly. Corn stocks as of March 1st were about 70 million bushels below the average trade guess. Soybean stocks also below the average trade guess as of March 1st. Wheat stocks slightly above the average trade guess. So I'd say the report overall, I mean, you could look at the acreage number at face value in a vacuum and say, oh, that's bearish. It was above trade expectations. But I think that the when you get into the details, okay, we've got a lot of expansion expected up north, plus lower stocks. The market did not view this as being a bearish item. Guys, report day is a good day to be a premium subscriber. I had a snapshot video out, I think about 20 minutes after the release, and I try to get this stuff out quickly. It's a quick, like 3 or 4 minute video just explaining exactly what happened, what the impacts are. If you guys are interested in the premium stuff, new videos, new content every single business day, go to standardgrain.com. You can sign up this morning. $50 a month, cancel at any time, no other fee, no other obligation. Nobody will try to sell you anything else. The sign up process is a piece of cake. This will take you about 1 minute with your credit card. We've got another nasty snowstorm headed for the northern part of the Corn Belt, northwest part of the Corn Belt. Parts of North Dakota, South Dakota, Minnesota, likely to see some additional snow beginning tomorrow. There are some areas here that could see another foot, 2 feet, 3 feet of snow just this week, and you've already got record snowpack in some of these areas. So again, to go back to the acreage report, this is going to have some implications here. I mean, there's already a bunch of snow on the ground. The temperatures still cold, still below freezing this week. I think we're looking for a warm up maybe later this week. I didn't look very closely at the temperatures this morning, but this is an issue, and this is kind of what I'm talking about when I say, okay, 92 million acres of corn intended, but intentions may not be reality because of this weather. Large money managers probably still net short the corn market. CFTC released its weekly commitment of traders report on Friday. During the week ending March 28th, funds were net buyers of 32,000 contracts of corn. So they're short covering in net, but still short about 13,000 as of last Tuesday. They could be closer to flat real time, depending on which private estimate you'd like to believe. Funds were net sellers of soybeans and wheat in that same week, but funds are still net long a lot of soybeans and still hold a pretty heavy net short in the SRW wheat market. More commercial grain companies exiting Russia. So Russia's trying to tighten controls over its grain exports, essentially. Last week, Cargill and Viterra announcing that they plan to halt exports from the country. They're going to cease operations. ADM and Dreyfus considering the same thing, the way that it sounds. So Russia is essentially trying to limit foreigners' influence in Russia's grain markets. I don't know exactly what this means. It sounds like these facilities are going to be restaffed. It doesn't sound like there's going to be a huge impact to exports or any sort of disruption. But I think that all of these changes and all of this uncertainty kind of associated with these changes is seen as being a friendly item in regard to the wheat market in particular, given that Russia is the world's largest wheat exporter. Excess Ukraine grain exports are piling up in Eastern Europe. Bloomberg ran this story over the weekend. So Poland and other neighboring states, following the invasion, agreed to help Ukraine move grain out of the country, right? Via rail into Europe rather than out of the Black Sea, because the Black Sea exports were kind of limited. They got the grain deal going, but they're still not shipping as much out of the Black Sea as they'd like. Now you've got some issues in Europe where these grain exports are kind of piling up. It's making farmers in Eastern Europe upset because it's hurting their prices. So they're talking about government price supports in some parts of Eastern Europe. There have been some protests. So this Ukraine grain situation, again, I think the grain deal has outperformed most expectations, but there are some issues in Eastern Europe as a result. And I think we've talked about this. I think we talked about this like a year ago now, how the rail systems versus in out of Ukraine and into Europe are different. It makes it real complicated in terms of shipping grain over land rather than sea to Europe. So this is another issue with this grain deal. And again, the current grain deal, which allows exports out of the Black Sea from Ukraine, expires on May 18th. There's been a lot of chatter in regard to whether or not that may be renewed. The cattle market had a good week last week. Cash cattle was anywhere from 166 in the south up to 170 in the north. So pretty solid week there. In the outside markets, U.S. dollars just a little bit lower. Stock market's mixed. Gold's up $1. Crude oil, the big mover here this morning, up $4.18 at 79.86 in the May WTI. Again, off of that OPEC news. Have a great week, guys. I will talk to you Tuesday.